We gotta give them to it one more time, man.
Way down in the jungle deep.
So yeah, this is, we've been playing around with this music, man. Hey, I wanted us to have something fun for the intro,
Well, you can't get any further than Dolomite. I'm waiting to see Dolomite walk. I'm waiting to see my boy Jerome walking out. Yeah, watch your mouth. Player from the deep south.
Exactly, man. Oh man, so you had your pumpkin spice today, right?
Had my pumpkin spice, man. I'm we stay hype.
That's what's up, man.
Best time of the year, people. Best time of the year.
Hey, so today, man, I wanted to. We just got off Facebook Live. We started talking about fix it and flip it and why they fail. So,
What a conversation.
Yeah, exactly. So wanted to learn more about that, man. So a little accident there.
Studio mishap.
Yeah. So wanted to talk about buy it and rent it versus fix it and flip it, man. So we get a lot of people out here talking about wholesaling, fixing and flipping. Then you hear these I tried real estate and it didn't work out for me. And the next thing they're saying is, I tried to do a fix and flip and, it didn't really work out. So why do you choose to go with more of a buy it, rent it strategy versus a fix it and flip it, man?
I mean, and again, I'll readdress it. For me, I really can't articulate the, on behalf of the fix and flips and wholesale because I've never done it. I moved right into the multifamily.
Right.
And because, for one, fixing and flipping is not real estate investing. Wholesaling is not real estate investing. What I was taught, real estate investing is creating passive income for yourself, being able to benefit from tax deferrals, cash flows, the periodic pay down of debt, the ability to take the project from point A to point B, value add strategy, and refinance. Pay off investors, use that cash to deploy into another asset, being able to benefit from the critical mass, the velocity of money. Yep. And again, I don't want to get too far into the weeds, but understanding how to really build wealth. Flipping and wholesaling, those are strategies that are not creating passive income. You don't necessarily own the building. You're not generating passive income. You're a project manager. When the project is done and completed, no matter how good you are, whether you're the contractor, whether you're managing the contractors, when the project is done, everybody should reap their benefits or their spoils. But guess what? Now you got to ramp up that engine again, and you got to start back from where? Scratch.
From scratch.
So you're not really creating passive income, and it's harder and harder unless you got your own TV show like HGTV. It's harder and harder to find these deals because now everyone is competing for these opportunities. Why? Because everyone can. The entry of the level or the entry to the barrier to entry is very low. So the competition is much higher at that with that product type. And again, I'm reluctant to call it real estate investing. So, to even segment and say in that part of real investing,
right.
I look at investing in real estate in either retail, multifamily, office space,
yep.
Storage, self-storage.
Okay.
These are commercial real estate, CRE investment opportunities that I look at as I categorize.
Right.
But I would never categorize flipping or wholesaling as real estate. I'll categorize wholesaling as a marketing business that caters to real estate as its product.
Okay.
Or its service. I would look at flipping as project management, subcontracting out, your project management skills,
right,
to be able to benefit from, from a certain an income or an income temporary income stream.
Right.
Basically, you're a subcontractor for hire. As a project manager, as a flipper, you're not necessarily, it involves aspects of real estate because you might use the MLS, you might use a realtor to sell the home or the product. But again, you're utilizing the services of real estate. It's not really real estate investing.
Got it.
Can't call yourself an investor when you're not creating passive income.
So why not, invest in things like stocks in that case as well? Like, why not invest in stocks versus real estate?
I mean, you can.
Right.
Now, if you're asking me now, choice, and why not Bryan?
Right.
It's because I don't control the stock.
Okay.
So if you ask me to invest in, Starbucks, Microsoft, or IBM, whatever, you ask me to invest in Wall Street and S&P 5, I have no control over that.
Right.
But Park Plaza Investments, multifamily, I have control as a general partner. I have for the most part a lot of control over that asset. I've evaluated the asset. I've evaluated the market conditions. I forecasted headwinds. I'm able to go into the property next day, make improvements, increase net operating income, increase bottom lines, train staff. Mm-hmm. I have a lot of controls that, stocks don't really, they don't offer. It's not don't really offer. They don't offer, right, period, right. Unless you're the chairman of the board. How many chairmen of boards do we have,
That makes sense, man. So what would you say are some of the huge benefits of actually being a property owner versus, so once again, we fix and flips, stocks, you don't control the assets. You're not necessarily a real estate investor when you're fixing and flipping. Where does the benefit come in from, starting to own rental real estate?
Well, again, a lot of that is self-explanatory, but it comes from the cash flows.
Correct.
Creating passive income from yourself, the ability to also benefit from the tax deferrals that is equally attractive.
Okay.
The benefit of periodic debt pay down.
Right.
So you're actually owning the property with no debt, or the ability to refi, the ability to benefit from the appreciation of the assets. Right. So those are just straight line depreciation abilities through various different tax strategies. These are just to name a few.
Yeah.
But the real question, I'm sure the listeners are really wanting us to get, because you can Google this information. This is not anything any different. You can Google the topic and you'll see it. But how does someone go? What I wanted to get into, outside of what we did on Facebook,
right.
What I wanted to get into with the meat and potatoes of the podcast is the feedback that I'm getting from the streets. How do you go from fixing and flipping, right, or wholesaling into apartment syndication? So okay. those are the things I'd like, because again, a lot of the stuff on what's the difference between the two, I think a lot of people already know. The problem is a lot of people don't know how to make that transition.
That's true. I'm asking for everyone who, so we got a lot of people who have the money or they have the credit, but they may not be as sophisticated. And, you got all these messages saying, fix it and flip it. We got the wholesaling, meetups and all this other stuff, mm-hmm. man. So mm-hmm. yeah, how would you transition from wholesaling into?
That's a good question. So if you're the money, if you're the limited partner, you're the equity, you're providing the, some of these strategies might be, they might be worth your while. Right. I know plenty of guys that still invest in a couple of these fix and flips when these guys bring it to them, because it's a quick way to make 20, 30, 40% on their money, whatever it may be. It's a quick way to earn money, with their money versus it just sitting in the bank.
Right.
But most of them are saying, hey, look, when there's a multifamily deal, let me know, because I'm looking for long-term strategy.
Of course.
I'm not looking for volatility of the fix and flip.
Of course.
So the fix and flip is can offer you a quick, cash multiple.
Right.
But at the end of the day, it can also offer, there's also a lot of risk associated with that, and there's more competition.
Right. So
less deals, more competition, more risk, changing markets. Things can happen to where you're not really making the money you thought you were by putting the money into an investment, putting right. those upgrades in, turning around and putting it on the market and trying to sell it. It's a lot of variables that are really short-term variables. Right. Interest rates got to be right. People have to be attracted to the home and the neighborhood, so on. So a lot of things have to happen, which are great, and it happens, and people right. are doing well by it. But there's these investors that say, okay, well, now I'm looking for a much more long-term strategy, and now what do I invest in? And so that's why they look at multifamily for the efficiency of the returns.
Right.
We talk about IRR. What is IRR? It's really, measures the efficiency of the model. So you can promise someone $20,000 returns at the end of 20 years, but each, and offer 5 different models, but each model may get that $20,000 back at a different period of time.
Right.
So which one is more efficient is where you really start looking at the IRR. So you look at, multifamily because it's multifaceted.
Right.
So less volatility because you're able to have more units. You're able to hide more mistakes. When you're dealing with single family, it's a break-even ratio, 1 unit vacant. You're 100%, your occupancy is 100% vacancy. Deal with a duplex, you got 1 vacant unit, you're 50% vacant. You just shave 50% by having one more, benefiting from critical mass, 1 more unit. So the more units you have, the more ability that you have to offset any kind of risks or mistakes that are made on the vacancy side of things. But the efficiency of the investment, the appreciation, again, now we're coming back to all the benefits of multifamily. So it's offering you a multitude of various different ways to grow your wealth and to put that dollar to work. Whereas the flipping is just one strategy. It's You buy it low, you put improvements in, and you try to benefit from the cash multiple. You're not really benefiting from the tax deferrals. You're not really benefiting from periodic, passive income on a monthly basis. It's just a wham, bam, thank you, ma'am, which again might be fine for an investor, but most people are going to look for a much more longer-term strategy. Right. If I got $50,000, $60,000 and someone comes to me and says, hey, I can give you 30% on that, of course I'm going to give them the $30,000, $40,000, the $50,000 and let them go bring me back, 20, 30% on that. But I'm also looking at a much more longer term strategy that's going to, help me build wealth and again, allow me to benefit from, various different, the strategies of multifamily that I talked about.
So I want to back that up a bit. So, some people, what I'm seeing is these rooms full of people that have like, they're couples. They have 50, 60,000 and they, they can invest, but they are going to have to do this themselves. So it's their only 50, 60,000. And they're in this room with somebody telling them fix and flip is the way, and they're about to buy this property. And that's why I'm asking you those questions. It's like, why should I not listen? Because I'm in this room full of hundreds of people, and they're telling, oh, this is what you got to do. You buy low, and you just took your 50, 60,000, and you bought a fix and flip.
Well, and there may not be anything wrong with that. So then my question would be, if I needed to be the fly on the wall, if they came to me and asked me for advice, then what is your strategy?
Right.
So, okay, you took 60, 50,000, keep the numbers, where I can do it in my head. You took 50,000, you did a fix and flip, you got 30% on that. What's the strategy? See, now the question becomes, what's the strategy?
Correct.
Do you go buy a boat? Do you go on vacation? So the strategy is, okay, well, what if the strategy is, okay, let's do this 3 or 4 times.
Correct.
Take the amount made, the profits,
right,
and the initial investment, and now roll that into multifamily and buying yourself a quad or an 8 unit or a 20 unit or a 40 unit.
Yeah.
Now you can take that income and then use it to catapult yourself to create passive income.
Perfect.
Now you're getting involved with multifamily. Then you have a model from which you've worked on, that you've come to us and you worked on the model. We've taught you how to manage the asset correctly. We've given you the tools and resources. So now you're sophisticated.
Correct.
Now we can talk about syndication.
Perfect.
Because you've got a model.
Perfect.
But you started from flipping.
Yeah.
You see what I'm saying?
Yep. Absolutely.
But you had a strategy. But if you're just going to continue to flip and flip and flip and flip and flip and then be flipped on,
correct,
then there's no strategy there. So then I have a problem with it. But if you're in that room and you're that couple that you talked about, I have no problem with you being in that room. I mean, fixing and flipping is an awesome strategy. You're not going to make it any other way. You're not going to go down the street and give it to Bank of America or Chase and get 20, 30, 40% on return on your investment. So fixing and flipping is a sound strategy if you've partnered with someone that knows what they're doing. But my question then becomes, what do you do with that money? Right. Do you go buy a boat? Do you go, are you flossing? You buying a car? See, my problem is seeing these cats all over social media jumping in and out of these cars and on these planes, giving a false narrative of what it takes to be sophisticated. That's not sophistication. Me and you have been around multi-millionaires, people worth 30, 40, 50, 60, hundreds of millions of dollars.
Correct.
They're not jumping in and out of Ferraris and Lamborghinis. They're not even having those conversations. No. Those are not even those are material things that bring no value to them. Now they'll jump on their own private plane and go to their own resorts that they've purchased and whatnot, and they have a great lifestyle. But the motivation is not the material things. The motivation is being able to multiply and build wealth and build a legacy for themselves. So that's my only situation or beef that I would have with the industry of saying this is real estate investing, because number one, it's not. And number two, it's a false narrative to talk about jumping in and out of cars and stuff, jumping in and out of a building that you own with your name on it. showing me passive income. So when you're sleeping at night, you're building wealth. Your kids have something that they can fall back on. Your kids have something they can fall back on. We're talking about generational wealth. That damn Lamborghini is losing value, and that does your children, and it comes and goes quickly. You can buy a Ferrari today, but where are you in 6 to 9 9 years with that mentality? So it's just, for me, it's just, it's changing the narrative out there. Absolutely. And we won't be talking about that. I won't be standing in front of a car, whether I own one or not is irrelevant. I won't ever stand in front of it because I'll never give you that false narrative unless the topic of podcasts are fast cars.
That makes sense,
then
man.
We'll have that conversation.
Yeah.
Then I'll stand in front and show you that. But this is a real estate podcast, so we're talking about building wealth through real estate. And there now we can really only talk about a few strategies, and that's owning CRE, commercial real estate investments.
That's true.
Building firms.
That's true. We have a secret weapon for all our wholesalers looking to get into multifamily real estate called the Multifamily Matrix. So I'd love for you to tell us more about that. If you're out there wholesaling, why is the Multifamily Matrix beneficial for them? What are the type of resources that they're going to be able to take advantage of, and how can that help them get into multifamily property?
Yeah, without getting too salesy, because this is our podcast for training and education, but the Multifamily Matrix is a place to go to learn. So, it was developed by us, myself and you, because we ask questions for ourselves. Where can we go? What can we do to leave something behind where others won't have to struggle as much? Not everybody's going to benefit from having 15, 20 years, 2 decades in the multifamily industry like I have.
Right.
I was working as a leasing agent, worked my way through, decades in the industry, gathered a ton of knowledge. Not everybody has that opportunity. Not everybody has the opportunity to go take their CCIM or go back to college and get a degree in real estate finance. And so, let's scratch that. Let's just be real. A lot of folks don't have that time. Yeah. So, what's out there? There's platforms out there, real estate platforms, won't name any names, that, talk about a wide variety of real estate topics and do a wonderful job. But we wanted to develop something that was specific to multifamily only. I'm not going to be interviewing and talking to anyone about anything other than how to invest in multifamily. Best and use products, services that cater to the industry, best minds that are putting projects together, doing projects, how to raise money, how to manage. That's it. You want to come here and you want to see anything other than multifamily, you're in the wrong spot. The Multifamily Matrix is a place where you're going to come to grow. It's where I think our motto is where, experienced investors started, our successful investors started and experienced investors grow.
Correct.
So this is the place where you're going to be able to get your knowledge in finance and underwriting and real estate, property management and asset management. You're going to be able to find all the resources, the tools, spreadsheets, marketing materials, to be able to market yourself, websites to be able to help you, content to be able to help you become a better thought leader, maybe at your meetups that you start. These are all the things that I missed, I didn't have. And these were the things that, I didn't have until I partnered with you and coupled with you, that you were able to bring with your digital marketing business and your savvy, you were able to bring to the table. So, this is what we're leaving behind. This is what we're opening. We're opening the door to the possibilities now of owning your own apartment building. No longer can you have excuses. So the Matrix is a lot of things.
That's right.
And a lot of what it's not is being able to accept your excuses from this point on. About why you can't be successful.
Absolutely. No, we brought in everything for you. We're even interviewing, all the top resources and services, from property management software to insurance to finance. No stone has been unturned when it comes to helping you invest in multifamily. And we brought all those tools under one roof, including the expertise of Bryan Chavis and also my digital marketing background from my company as well. So, we've got an amazing resource for you. We hope that you take advantage of it. And, keep tuning in to this podcast. We ask that you share it, subscribe to it, and please reach out and ask us questions. We would love to answer your questions. This is not just about us going back and forth. We really want to answer your questions and help you guys be successful. So please reach out to us at bryanchavis.com. And Bryan, man, thank you as always for being here and blessing us with your knowledge, man. We really appreciate it, brother.
Absolutely. It's great to be here. And I want to leave everybody with one last thing.
Please.
So my flippers and my wholesalers, it's about understanding how do I get from point A to point B. So I've wholesaled, but now I want to go to the next level. I want to understand how to get involved with the multifamily game. So how do we transition? How do we learn underwriting and financing? How do I develop scripts? Where do I go to get scripts to be able to talk to investors? How do I market to these guys, direct mail pieces, schedule meetings to be able to speak to them and come up with a wide variety of resources? So that's what we're going to be working on, helping you all get from that out of the grind of wholesaling and flipping, and then transitioning into owning apartment assets. So, we call that segment apartment rescue. So Bryan Chavis' apartment rescue, be looking out for that. The logo hasn't been created yet. Nate's working on it, but look for that build out, because that's going to be the place that's really going to specifically talk to those individuals so we can help them transition into the multifamily industry. But all in all, everything will be located within the multifamily matrix.
Absolutely. Bryan, thank you so much for being here, man, and look forward to speaking with you next week, brother.
Yes, sir.
All right.